JB here, September 15th, 2021. Hope everybody's doing outstanding. Not really much to talk about the first 2 days. um, of course, the S&P is down 6 of the past 7. Thank you, appreciate that. Um, all the headlines starting to talk about this peak growth, right? I mean, that was some of the concern I had a couple weeks ago as we head into earnings, or as earnings start to, um, you know, the big companies reported. Then there was some of these downside guidance revisions. You had Sherman-Williams, PPG, obviously Boston Beer, but that's a little different. It's not the total signal of the overall economy. And then you have these pieces coming out around the supply situation. This morning was steel. Every day it seems like there's another a piece that comes out that kind of paints a picture of this supply situation not going away anytime soon. Of course, we already know about the chips. Pinto mentioned it last week and week before when Sherman-Williams came out with their revised guidance. You go to your local Sherman-Williams store or Home Depot, or Lowe's, and you look at the paint rack, and there's definitely a lot of holes there. But I think you can look across a lot of different sectors and see the same kind of thing. So you would think, considering where we've come from, this would be it. This is the top. We're going to have this big crash or correction. At some point it's going to happen. That's just a lot of times it happens without any kind of catalyst or a headline that pushes it into correction territory. You have to think, as long as we hold the 50-day on the S&P, I think things are pretty good there. So take a look at a bounce today. It's tough to try and get some calls the last couple days when we have these. The market was failing to find a bid, and we closed at the lows both days on Monday and Tuesday. Now we have a decent reversal despite the fall right at the open. So maybe towards maybe later today or tomorrow, I'll look to get some weekly strikes. It is monthly option expiration, which kind of gives an opportunity to play some of the names for some decent risk reward scenarios in lieu of playing monthly strikes. Of course, I've been talking about the lending tree. Boston Beer, which I kind of was going to take off the watch list if it didn't find a bid, but that could be a nice name Thursday or Friday. GWW is a name I've been watching because some of these industrial names I've got destroyed. Caterpillar, Deere. So those are some of the names I'll be watching. But first, let me talk about Fizz. Still holding a couple of my 55 strikes. Would have liked to obviously close the last couple for flat. I already locked in for profit, so I still think there's an opportunity for a squeeze, especially if the market bounces. It's a great fundamental story. I mean, most times when you look at a beverage maker, and back in the day it was SodaStream, I used to talk about when it was sparkling seltzer, right? And National Beverage, which ticker FIZZ, that's what they are. Like LaCroix and some other brands that they have talk about a healthy lifestyle. But the company struggled last couple of quarters, and the stock got destroyed. It has a 26% short interest. Back when the big blow up with GameStop at the start of the year in February, Fizz went from, I don't know if it went up from 60 to like 120, similar to what happened with iRobot, just as a function of a lot of those people, Melvin and all these other folks were short those names. They had to cover their shorts in Fizz. I'm not saying the same thing's going to happen here with Fizz, but I think there's an opportunity for it to break into the 60s and possibly higher. I mean, it's a great story. It's not like it's debt laden, negative cash flow, things like that. I mean, they just issued, I think, a 1-for-1 dividend. So like like a huge cash dividend, $500 million or something like that. I don't know if that was the last start of this year. And the only issue with Fizz is their CEO is pretty unorthodox. And some of the things he says, you would just kind of mind-boggling that he runs such a nice brand, but some of the things, I guess it comes with the territory, and probably some of the reason why there's a huge short interest, because he's probably a time bomb ticking, which he's already had some suits. I guess the airline pilots that flew him said there was some sexual assault. There was accusations, blah blah blah, and then he came out in the press to kind of refute that. But anyway, so I just hold a couple freebies, probably. Maybe wait till Friday if it finds support. Maybe add some strikes into October. So that's Fizz. Intercept. They were at the Bard virtual healthcare conference yesterday. It looks like nothing of substance came out, but the stock is kind of holding here in this 15 channel. And you have to think at some point, and again, another one of these highly shorted names, but the company, again, trades less than nearly one times revenues, is right at the 50-day moving average, which is 1586. At some point, I'll lock the rest of my 15s in, and then probably look for October's, maybe 22s, 20s, for a possible squeeze. It's going to happen at some point. I mean, look at the chart, and I don't have the one with the annotations on here, but if you take a look at Intercept, it certainly looks like it's setting up. So that's kind of the thought process there on Intercept, and maybe today or tomorrow I'll look to close the rest and then start to look for those October strikes. Next is Lending Tree, and gosh, you take a look, and I saw folks mentioning about the payments, because I think payments, right, and I don't want to go on a rant on Visa and MasterCard, but the way people transact is totally getting disrupted. And then you take a look at lending, right? Back in the day, you go to your local bank and you see Bob. Bob probably is a neighbor or someone down the street, and you go and apply for a loan, right? Or you try and get credit. Now you go online, and it's a platform like Lending Tree, and you put your stuff in, and they pair you with someone who can provide a loan at a decent rate, and you can be able to shop around. There's other lenders where it's actually crowd-based funding. So there's a lot of different platforms out there, and Lending Tree got destroyed back. Let's see if I can pull the chart up. The stock was 360 back in February, and just got destroyed because of for the first time in quite some time, they have a declining growth. So let's see, back in 2019 was a $420 stock. And then back in March, actually, end of February, 375. So it's more than cut in half. Just because it's cut in half doesn't mean that it's going to bounce back. But I think the story's there, and it's starting to, on the cusp of the turnaround. You take a look, when was it? Back in, I think it was back in 2020, I guess is when the COVID situation. But I certainly think there's an opportunity to play Tree for squeeze, whether it be a bounce back into the 200s or just a short-term relief rally up to 170 or so. Not doing much here today. Yesterday, I think 158 or so looked like it was going to break out, then sold off with the rest of the market. Again, one of those monthly option expiration names that I think there's an opportunity. Take maybe the 165 into tomorrow. I didn't even look. What are those down to now? To 30 cents. The 160s are 80 cents. Just an interesting name. And again, another one that's highly shorted. Let's see what the new short interest. I don't even know if I have that up here. 15% short interest on Tree. And then that whole sector as a whole, it got destroyed on Monday, and then it starts to come back. And some of these names, they're getting kind of this sector is really growing great. Upstart, you have, the firm's a little different, but similar. It's kind of the same sector. And then, what was it, Klarna? Klarna's that Europe company that does this thing where you buy your clothes online, but you can do 3 monthly payments, no credit check. But this is all transforming the way people transact and lend. And I'm just surprised that Lending Tree is trading where it is in regards to its multiple too. Where is it at now? It might be like 2 times revenues. What it is pricing in declining growth, right? So once it starts to get back to growth, then you start to think maybe the multiples start to change here. Why is this not going? Yeah, it trades almost 2 times revenues. So it's crazy stuff in regards to its valuation. So that's why you continue to hear me talk about it. The time will probably run, if I get the weekly options on Thursday, it'll probably run on Monday, right? That's just kind of how it works most times. But don't be surprised, maybe October 200s. I didn't even look at those today. I looked at the start of the week. What are those now? No bids. 195s are 45 by 75. So maybe those at some point. Okay, so this is Lending Tree. Sorry, just scroll back up. Zyme is supposed to report some phase 2 data on tomorrow. I don't know if it's going to be out before the open, after the close. Supposedly, I guess they had a deck that already came out, kind of painting a picture around what the data is going to look like. I don't know if that came out over the weekend. Sitting here at $34, there was buyout rumors a couple months ago. I think it was for $55. And it's just a great name. I think it was one of my top 5 stocks last year. It has a lot of partnerships. So a lot of these partnerships are with these huge companies. I'll see if I can get the slide up for Zymeworks. But you have to think at some point one of these companies is going to say, I'll just gobble them up. And especially down here right near multi-month lows. the premiums are expensive, especially if you go out into the next month's strikes. Because I was looking, I think it was the 50s got destroyed. The October 50s were a dollar. Let's see what they are now. Yeah, 95 by 145. So you're talking $16 in what, 30 days, and that's not trading days. So that's a pretty large move for Zyme. $16 or nearly 50% move just for the $50 strikes. So it makes it tough on a risk-reward basis unless you think there's a buyout. But the buyout was rumored at $55, so it was the risk there to make a five-bagger, which is nice, obviously, but you got to hope on a rare event happening. So I'll say maybe before the end of the day, I'll look for some decent risk-reward strikes, but it's really tough to find them. Even the weeklies are tough. The 40s are 35 by $1.10, $6 out of the money. So kind of tough to play. Ironically enough, again, I'll say this now, and then tomorrow Zyme will have some crazy data out, and the stock will be at $50 and $55, and I'll be kicking myself. But that's kind of the thought process. I'd rather pass on a play due to risk reward and have a rationale around passing on it than get in and lose money on it, right? It's always good to have a strategy. So that's Fizz. Oh, Apple. And another one of those Apple events. I mean, nothing mind-blowing in regards to its product offering. And I think the fact that they're going to have the phones available pretty quickly, I think that bodes well. I think to me, the concern would be about the supply, right? The issue that maybe they're not going to, like last year, they weren't able to start the iPhone pre-orders till October. There was a whole big backlog. Everybody was concerned about that. So outside of the Apple Watch 7, which there's no date yet, but it's going to be sometime in the fall, I think that bodes well. I'm not going to sit there and load Apple calls or whatever, but decent conference yesterday. Funny story. My I guess I have the XS Max for a while, and I upgraded to the 12 Pro Max. I had issues, so now I have to send mine in, and now I have my iPhone 7, and it works great. And the only thing I miss is my I have to use my thumbprint to open it up. But then I get used to it. And then I use my wife's phone, and I feel like weird with it. So it just kind of goes to show you. They say, oh, everybody's going to, there was analysts this morning talking about the upgrade cycle. Oh, lots of people are going to do this upgrade cycle. I don't think there's any crazy. They always talk about battery life, and I think the picture is not, the camera's no substantial upgrade from the Pro, from when last cycle where there was a huge upgrade to the camera. So, I mean, you always have your iPhone loyalists who are going to upgrade. You have a lot of those folks who are on those year-to-year plans where they're allowed to upgrade to the next cycle anyway. So, we'll have to see how that all plays out with Apple. There's also, they talked about their fitness subscription, right? But their bundle, pretty much, I mean, if you're going to pay for most of the stuff anyway, Apple Music, you're going to pay for Apple News, you just bundle it in and get the Apple Family plan, which includes the fitness. You had Peloton was selling. I think they were going to add more classes or whatever. I don't even know what they're going to. But those stocks sold off. Oh, and then Apple Plus, right? I actually haven't watched anything on Apple Plus in quite some time. I think I watched Amazing Stories was the last thing I watched on Apple Plus. I think my wife wanted to see the morning show. They have Reese Witherspoon. There's a lot of folks in there. I think it was all on the advertisements at the start of the presentation yesterday. But supposedly, again, they're going to spend so much money on the content. We'll have to see how that all plays out. I think that's it. I'm trying to think of some other things here. Ted Lasso. Wynn. Yeah, these casinos. When you take a look at what has really been a huge opportunity for Wynn, Las Vegas Sands, is Macau. And Macau was on fire. It used to be 30% year-over-year growth. You would be trading Wynn, and you would hope that Macau data would come out and it would show the high rollers as a percent of business would go up, blah blah blah. And then you started having issues, right? Then you had COVID. They shut down Macau, and now you have the possibility that I guess it's in 45 days they're going to have some kind of rewriting of the regulations for gaming. And I think some of these companies, Wynn Las Vegas, I think their gaming licenses come up in a year in Macau. Talks that they're going to have to run their profits through China before they can give it back to shareholder to the company. It's a lot of like questionable things. So I mean, obviously it was down 11% yesterday. It's down another 7% today. So people are, I guess I wouldn't say shaking it off, but I mean that's some pretty damning stuff, I guess, if you're a shareholder of a publicly traded company here that derives a lot of their growth is from abroad in an area that's going to be under heavy scrutiny. So certainly something to watch. I was at some, I put on the watch list. I was going to look for some win lotto puts. Goes down to 82.55, and then boom, within a matter of 25 minutes, it's from 82 to 86. It's sitting here at 85. I'll probably just put on a sit and watch list. Maybe tomorrow or Friday I'll look to get some positions there and win. I talked about Zyme. I'm trying to think of some of the other names that I was watching over the last couple of days. Look at trees down here, 52.87. Twilio, Spot. Some of these names just like they're turning, and then you have other names like, Roku's just, and who knows what it looks like with Amazon and their TVs. I mean, Amazon partnered with Best Buy with their TVs to get the Fire Stick platform, whatever, incorporated in their TVs. So who knows what that all looks like? But it seems like every time there's a catalyst for Roku to sell off, and it does sell off, then it just becomes a buying opportunity. I've always said with Roku, the more it's the only content neutral platform. So it's tough for me to see that, unless Amazon just gobbles everything up and just becomes just the one platform to rule them all. That's what my motto was for Roku, right? The Roku bull case is one platform to stream them all. If Amazon's able to pull that off, then that's great. But TV is such a commoditized business now. I don't know what the profit margin is on the TVs that they'll come out with, but to Amazon, it's similar to what they do with their other devices. They're not worried about making money on the Kindle or any of these Echo devices. They're using that as a gateway. It's the gateway drug, right? So they would hope that they can get Amazon TVs in everybody's home and then just use as a gateway for the home automation, blah blah blah. But interesting stuff. I mean, you take a look at Roku. It's down. How much is it down to last week? Let's see. I can pull this up, but I don't have my charts. I haven't traded Roku in a long time, but I was watching on Friday too when the news came out. So it's down 4% this week, and then you take a look at the month. It's down 11% this month, Roku, and it's down 3 months in a row. So is that the end of Roku? I mean, gosh, people calling the end of Roku at $20 and $30 and $50. Maybe it is. Who knows? But probably the lower it goes, the more of an attractive buyout candidate it becomes, especially for these companies. Just spend so much money on this content. It's just insane how much money, Netflix and now Apple, Amazon, HBO, Peacock, all these companies are spending billions of dollars on content, and then Roku is responsible for streaming it, and they're just going to monetize it. So it's the craziest kind of situation. So you got to think at some point someone's going to realize that and say, wow, we're missing the high margin revenue, but we're spending money on all this content that's not high margin. Disney Plus, the list goes on and on. And then the more and more of these companies that go and do direct to consumer on the streaming side as opposed to releasing it in the theaters, which just adds more credibility to that case. Anyway, I think that's it, folks. I'll try to get back on later. Oh, DigitalOcean. You know what? I was looking at the 80s. Was it last week or the week before? It went up to 72. It was MDB earnings, and DigitalOcean went all the way from 60 to 72 or something. Then the next week it sold off, and then it's slowly but surely coming back. And I was looking at the 80 strikes, and 80 strikes are barely, unless they're over $1. Let's see. So it's been tough to play that, unless you went further out. Oh, they're $1.15 by $1.50. I could go back and look at the history. But that's certainly a great story. That's probably over $100 at some point, despite the fact that Citron Research is bullish on it. Anyway, let's have a great day, folks. I'll try and get back rock and roll.